Time now for a look at the business news, and Brian Quinn joins us in studio for that. Brian, we're going to start with the markets and, of course, the effect of that somewhat surprise resignation of David Davis, the UK Brexit Secretary. That's affecting the sterling.
Indeed, the illusion of political unity in Theresa May's Tory party short-lived after her closed-door cabinet meeting at the Prime Minister's residence Friday. With the loss of the UK's lead negotiator with just 9 months to go, rattling the pound a bit as it seesawed on currency markets, dropping down to $1.30 before regaining ground. It's currently trading up above 133 for a 0.2% gain for the day. Well, Davis's resignation, obviously yet another hit to Theresa May's authority, but plenty of analysts actually see it as a possible positive sign. Earlier, France 24 spoke to Stephen Innes, head of trading Asia at Awanda in Singapore, about just that.
You know, it's almost like this was to be expected. You know, we've seen lots of political upheaval in the UK, and it's almost like, you know, people are taking a breath. At least we're getting some sort of, seeing some sort of end in Brexit. It's like whether it be a hard or a soft Brexit. I think the market's actually looking at this as a favorable light, that we're actually making some progress, and we're not going backwards on this.
The European index is indeed opening higher on Monday. London's FTSE 100 up 0.4%. The CAC currently here in Paris up 0.5% as Air France KLM announced some increased passenger numbers. Imports and exports both on the rise in Germany, and some new data. The Frankfurt DAX up 0.4%. Asian markets showing some strong gains on Monday on the back of positive U.S. employment data. Concerns over the brewing trade war between America and China clearly taking a back seat. We have the Tokyo Nikkei finishing up 1.2% amid gains in appliance makers and pharmaceuticals. Samsung shares up nearly 1.5% in Seoul. That helps send the Kospi up over 0.5%. Hong Kong's Hang Seng up around 1.7% as Chinese smartphone maker Xiaomi recovered in late trading after a weak market debut. Shanghai Composite up a full 2.4% there for the day. Well, next, corporate World Cup sponsorship is huge business, but a recent FIFA bribery scandal has taken a big bite out of that, with a number of large companies stepping back from advertising in the tournament. Now there's a new player on the field. China has been stepping up its investment in the Cup as Beijing pushes to boost the popularity of football across the country. Georgina Robertson reports.
China. They may not have qualified for the tournament, but in terms of sponsorship, they've become a key player. Chinese smartphone manufacturer Vivo paid €400 million for a sponsorship deal, which includes this year's World Cup and Qatar 2022. And the Chinese conglomerate Wanda is a global partner sponsor, putting it alongside giants such as Coca-Cola, Visa and Adidas. The shift comes after FIFA became embroiled in a corruption scandal. FIFA sponsorship was worth $1.6 billion in 2014. But after the scandal, major brands including Sony, Emirates, Johnson & Johnson, they didn't renew their sponsorship contracts.
We never spoke to anybody telling us, you know what, you got toxic, we don't want to work with you. There was an interest because, again, you have a shift of the world economy, and some Asian company, or Chinese in particular, looking for the best vector of communication to push the drive to the world with a global footprint.
Before the FIFA scandal, these sponsorship deals were rare. These Chinese brands have grabbed the opportunity. Beyond the massive domestic audiences of Chinese football fans, the access to Western audiences is enticing.
I think, Wanda is the first Chinese top partner with FIFA, and we're pretty proud of that. And we believe it will be good for the sports in China to develop.
President Xi Jinping has made no secret of his football ambitions, one day hoping to hold the World Cup in China. But for now, football and the business of the glorious game are growing fast.
Well, finally, for business, the Spanish wine sector has seen some increased sales lately, but here in France, that's for all the wrong reasons. A recent investigation by France's anti-fraud agency has shown that some 10 million bottles of Spanish rosé have been passed off as French wine since 2015. French daily Le Parisien reporting that more than 1/5 of importers, distributors, bottlers, and restaurants have been Francifying the fruit of Spain's vineyards with a simple motive. While French rosé costs 75 to 90 cents per liter at wholesale, Spanish rosé, the cost is just 34 cents per liter. The next step, of course, since the French do take their wine quite seriously, will be prosecutions.
They take it quite seriously, but apparently they didn't notice in the taste. got away with it. That says a lot, doesn't it, Brian?
Right there.
Thanks a lot for that business update, Brian Quinn, there with all the latest business news. Well,